and welcome to this video podcast. I'm Thomas Allen, editor of International Rental News, IRN, and I'm here with Chris Slight, Managing Director of Specialist Market Research and Forecasting Company Off-Highway Research, OHR for short. The intention of this interview is to get some insight into the new report published by OHR in collaboration with IRN called the Global Rental Market. Welcome, Chris, and thank you for joining me today.
Thanks a lot, Thomas. Pleasure to be here.
Now, International Rental News has been publishing its annual IRN 100 League Table of the world's largest rental companies for almost 20 years. For that, we collect data not only on company revenues, but also on things such as capital expenditure, number of depots, and staff employed. So, Chris, you've taken all that data and crunched it to produce this report. Are you able to give us some oversight of how you've used that data and what the report offers?
Yeah, absolutely. What we've done is gone back through the archives of our IRN and picked, actually over a decade worth of data and put that into a database. And that's allowed us to look at the trends in all those things you've mentioned. So revenues is kind of the obvious one to plot the growth of the industry over those years. But at the same time, we've followed things like depot numbers. We've looked at the headcount in the rental industry. We've looked at CapEx, which is something you've started following in the last few years. So we've got all these trends, and we've also got some very important benchmarks and ratios which come out of that about productivity and footprint.
Okay, right. And a headline finding of this report is that rental revenues of the world's top 100 rental companies have more than doubled in the last decade. Are you able to put some figures on that and perhaps give us an idea of why there's been such strong growth?
Yeah, absolutely. It was a very stark finding when we crunched all this information. There are two important drivers here. Clearly, the most important is consolidation. We're looking at the 100 biggest rental companies, and over the last 10 decades, there have been a phenomenal number of mergers and acquisitions in the sector. And that's seen the very big companies just get bigger and bigger and bigger. So that's really the key factor which has driven up revenues in the industry over the last decade. The other thing that we're seeing is very clearly a move towards rental in many, many markets. There are some markets which are relatively mature, such as the US, the UK and Japan. But even in those markets, there is some move towards rental. And in other markets which are less mature or less familiar with the rental concept, there's clearly a move towards rental almost anywhere you look in the world. And even in countries, particularly emerging markets where rental may not be catching on, it's certainly not a concept that's retreating. So yeah, rental is gathering momentum around the world, I would say.
And breaking that down a bit, what regions have seen the strongest growth? And what is the nature of the companies making up the top 100? Are they generalists or specialists, perhaps privately or publicly owned, or independent, or even part of larger companies?
Well, in terms of growth, it can be a little bit up and down year to year because if you have one or two big acquisitions in a year, it can swing things. But if you average it out over 5 or 10 years, then clearly the growth is strongest in North America. One of the factors there is that you kind of already have some of the biggest rental chains, and the size of the acquisitions are quite big, so the revenue growth you get is quite big. But having said that, we've also seen very strong growth, almost on a par in Asia Pacific. And when we talk about Asia Pacific in the context of this report, we're really talking about Japan. And again, there's another market where not only have the independent rental companies consolidated, but you've had a lot of activity with OEMs getting into rental or getting further into rental. So yes, but the point I would make is that rental is growing all over. I didn't mention Europe specifically, but clearly some of the big acquisitions we've seen in the last year or two have been a very, very significant driver of growth there as well. In terms of speciality, most rental companies, about 75% in revenue terms, are generalists, and that's a ratio that has grown over the last decade. One of the things we've seen there is that things which maybe used to be considered a little bit specialist, like powered access rental, for example, that's kind of moved more into the mainstream. And even things which genuinely are a speciality, like accommodation or maybe power, what you're seeing is these big generalist rental chains are kind of setting up a business within their business to do speciality rentals. In terms of ownership, interestingly, it's fairly evenly split between public and private companies. We found it was about 60-40 public to private in 2019, and that did surprise me, because there are so many big acquisitions going on in the sector. You would think that companies would need to be stock market traded to have access to the kind of capital that they need. But I mean, if you look at a private company like Bulls, is still making very big acquisitions, and that's a private company. So clearly the kind of maturity of the industry hasn't really reached the level where companies have to be stock market traded. But that might be one to watch for the future. You might see more and more companies having initial public offerings of shares as the need for capital increases. In terms of their affiliation, the vast majority of rental companies are independent, standalone companies, so specialist rental companies. There are a few cases where they're owned by bigger chains, the obvious one being Home Depot in North America, where it has its own in-store rental chain, but the company is first and foremost a retailer. And you also, of course, have the phenomenon of rental being owned either or their dealers. That is a fairly small proportion of the rental industry, and it's not one that we've particularly seen growing, but it is particularly significant in Japan.
Right. And would you be able to put the rental industry's growth in context? How has the global economy fared over the past 10 years or so? What key events have there been? And how might they have fed into the growth of rental?
Yeah, again, it's an interesting one, and it does underline the above average growth of the rental industry. As you observed at the start, Thomas, rental revenues for the top 100 companies have more than doubled in the last 10 years, and that's equivalent to about 9% compound annual growth each year. If you look at other indicators, if you look at GDP, for example, global GDP over the last decade has grown by 3 to 4% a year. So rental is clearly demonstrating a much higher growth characteristic than the economy in general. The other thing that we looked at very closely, which is kind of off-highway research's speciality, is we compared the growth in rental to the growth in the construction equipment market. Equipment market is cyclical, sometimes very violently so, but overall there is a long-term growth trend. Averages out over the points that we chose of about 3 to 4% compound annual growth, but with a lot of waving up and down in between. So again, you know, it's hard to find a broad and related economic indicator that really compares to the very high and very consistent growth which rental has demonstrated.
Right. And due to their growth, rental companies have become increasingly important customers to equipment manufacturers. How has the proportion of global equipment sales going to rental companies changed, and how do you see it changing in the future?
Well, this is something that we monitor at Off-Highway Research whenever we research a market for a particular type of equipment. We ask the people we interview what proportion of sales go to different customer groups, construction companies, mines and quarries, and rental being one of them. And we find, particularly in Europe, that proportion has been creeping up year on year. I think the important thing to say about rental is, yes, that's a trend that's happening out there, but it is pretty slow. You know, if things shift towards rental by 1 or 2% per year, then you know that's quite a move. The thing about that this IRN 100 study shows us is just what enormous spending power these big rental chains are beginning to have. If you look at the capex that's being researched for companies like United Rentals or Ashtead, which owns the Sunbelt franchise, you're looking at companies that have spending power approaching 2 billion euros per year. I mean, that's phenomenal. There are very, very few companies in the world that spend that amount of money. Maybe one or two very big mining companies would spend that amount of money in a year, or maybe one or two of the very big contractors, maybe some of the big Chinese contractors. But, you know, it does illustrate just how very significant individual rental companies are becoming and what enormous spending power they wield.
Mm. And you've mentioned consolidation. What other important trends has the data revealed?
Yes, it's a very interesting one. Clearly, with rental revenues growing, and we're looking at 100 companies in each year, so the average revenues per rental company have risen sharply. But we've also looked at things like the number of depots, the number of people, and also ratios like turnover per staff member, revenues per staff member, which is a measure of productivity. And we found that those benchmarks, like product, well, let's take a step back. We found that staff numbers haven't gone up as steeply as revenues have, and we found that depot numbers haven't gone up as steeply as revenues have. So with all this consolidation, that does suggest that the rental companies are becoming a little bit leaner. So they're generating more revenues per staff member, so more productive. And you're also seeing more revenues per depot. So that does perhaps suggest a bit of a change in footprint. Instead of lots of relatively small depots, you're maybe going to a situation where there are fewer bigger depots that get the kind of economies of scale that you would expect as an industry consolidates and gets a little bit more mature. But those dynamics are very different region to region, and it's a fascinating thing to dive into, actually.
And in the report, you put special focus on some key regions of the rental industry where it's most mature, so in Europe, North America, and Japan. Could you outline some of the key characteristics of each one? How do the rental markets in each of those regions compare to one another?
Sure. Well, let's start with North America. We would say, based on our research, America is the most mature rental market in the world. You have one or two genuinely nationwide rental chains in the US, and quite a few more that are pretty close to it. It's also, you know, the area that's probably seen the most aggressive consolidation. And of course, the biggest rental company in the world by quite a wide margin is United. And that's a company that was kind of basically created to consolidate the rental industry. So it's perhaps not surprising that that's a characteristic of the North American market. But having said that, after those two or three national chains and the three or four nearly national chains, you do get this pyramid effect of you know, quite a lot of regional players in North America. You know, even companies that are only present in, you know, one corner of the country can be really quite big in revenue terms. So as mature as the North American market is, you know, you would expect a lot more to happen in there in terms of consolidation. And that really applies to most of the other more mature markets that we've looked at. Again, you can look at Europe. You know, is there really a genuine pan-European rental company? Loxam is the biggest, and it's probably the closest you get to a pan-European network. It does have a network throughout continental Europe as well as a footprint in the UK. But really, that's the only one. There are a couple of quite big chains that are in continental Europe, but the UK is by far the most important rental market in Europe. So again, there's certainly been some astonishing developments over the last few years with the way the European rental industry is consolidated. But if you look at it objectively, there's an awfully long way to go. And then you have Japan, which is kind of a bit of a special case. There are 8 or 9 major rental chains there. The biggest ones are the independents, but you also have the OEMs themselves taking a very, very active role in rental. And that makes the Japanese industry different again, because there's a very high proportion of rental revenues attributable to the OEMs. And again, you know, it's a very populous country, and there's a lot of construction activity in Japan. But even eight or nine sort of national chains is still probably too many for a country of that size. So yes, you know, again, probably some more consolidation there. I think the other interesting thing about Japan is the way the rental companies there have found expansion places into Southeast Asia. They've set up a lot of subsidiaries, and these sort of emerging markets are becoming much more significant bits of their business.
And finally, looking to the future, what sort of growth do you expect to see in the rental industry, and how might the COVID-19 pandemic affect the global rental market in the longer term?
Well, we see growth continuing for the foreseeable future. We're in the business of forecasting, and one of the things that we did was we looked at the history of growth. We did a lot of research into that, and notwithstanding the current difficulties around COVID-19, we would still expect that growth to continue, with revenues of the IRN 100, you know, probably hitting in the region of 75 billion euros in 2024 compared to the 54 billion that we saw in 2019. It's a very valid question to ask how coronavirus will affect that. We were fortunate in that the IRN 100 goes back so far that we were able to compare what's happening now with the global economic crisis that happened at the end of the last decade. And while that slowed growth and the IRN 100 revenues stood still for a year or two, the rebound was very quick. Revenues didn't really fall back if you look at the IRN 100 as a whole, and the growth just kind of followed on. So yes, we would expect probably a bit of a slowdown to show in next year's IRN 100 due to the economic slowdown around the world this year. But I mean, in terms of the growth of this industry, it's not much more than a speed bump, I wouldn't say. And we see these sort of growth characteristics extending for many years to come. As I said, there have been some astonishing mergers and acquisitions in the rental industry, but given really that it's still quite a fragmented industry, I would expect much, much more to come, and many bigger deals to come down the pipeline in the next 5 to 10 years.
Okay, right, well, we'll keep our eyes out for those. And Chris, it's been a pleasure. Thank you very much. Fascinating to hear insights about what's clearly a dynamic market. The Global Rental Market Report is available on Off-Highway Research's website. A link to it will be put in the description below this recording. So thank you again, Chris.
My pleasure. Thank you for having me, Thomas.